Today we're walking through some order flow theory. It's pretty much like an aggr tutorial. Aggr is like the main venue I'm using to absorb flow and follow the tape. But we will also cover velodata and Kiyotaka, two tools that are quite helpful when it comes to order flow. Okay, we're hopping on with aggr. If you open aggr, mostly likely you will see like a tape and maybe a chart. To get like this kind of template, you can hover to like the dashboard from the left and scroll down to aggr.trade full. This is the one that I'm using. This is the one also that has stuff like CVDs for Hyperliquid, which hasn't been in previous forms of that version. And what do we have here? First of all, we have on the left side our tapes. This is live market orders, like spot trades. This is live spot market trades. So if you see one guy on BitHip clipping 5.5 BTC, this happened already in the book, right? So this is more like a history of market entries over a certain threshold of size, right? I put in here 50k for spot, and I think 100k for our perps. You could even move this higher. This is just like something I'm using for my tape. And the beauty of aggr is that you have sound, right? You probably won't hear it here in the recording and in the stream because of copyright, but the beauty is that your brain can listen to the tape but not watching it, right? Like the high sounds are buys and the deep sounds are sells. And this is how you get like a good feeling about the market without even looking at charts. Now we come to the more interesting part. First of all, we have like here a chart, just price chart. Below that, time frame, you can decide for yourself what's fitting. Usually I tend to trade between M5 and H1. Below that we have CVDs, volume deltas. So this tracks the tape and how much of the volume is skewed to the sell side and to the buy side, right? So in theory, markets going down should trigger CVDs going down, right? Because we have more sell pressure than buy pressure, leading to lower prices, right? Sometimes there are some divergences though, and those are pretty helpful to spot. But we will come to like the details when it's net positive to be long or short based off flow. I will give some examples. But having this cleared, you can also see like the delta per minute or like per time frame in here. Upper one spot, lower one perps. Below that, we have first of all spot premium. If it's in the blue, spot is, as you can see, buying for a bit of premium, so paying a bit extra, and we have lesser shorts in the market. Vice versa right now, since perp longs got skewed, we have a short, or like we have a discount on perps because discount on spot because spot got sold, which led to this liquidation we saw here, right? Below here we have liquidation bars, and the larger the delta, the larger the liquidations came in, right? This will, you see here that like the upper ones are shorts getting liquidated, the lower ones are the longs getting liquidated. Here on the right side, this is where I go down on lower time frame, because this is where the beauty happens, where we track flow based or split between exchanges, right? Upper one is chart, obviously. Below that we have CVDs split on the size per trade taken, right? So we know for a fact that spot CVDs are down, right? But we can come in and say, okay, what's the spot CVD in here lower time frame? Who are those guys that are selling? And then you can see spot big is having like minus 250 million outflow. Meanwhile, small spot orders, like the smaller ones, are net buyers compared to shorts, compared to sellers. So we have on the smallest position sizing, we have more buys than sales, but on the bigger size of the market, we have more sells than buyers, right? Same for perps. And below here, like this is the main venue I'm looking at. This is CVDs split by exchanges, and for me, most like we have Binance Spot, the orange one. Then we have Bybit, which is futures, the yellow one, perps. Then we have Deribit, which is option markets. I think this one is not really a signal. It's usually turned off. Then we have Coinbase Spot, blue one, also like the preferred venue of Michael Saylor, for example. So if you want to spot Saylor in the books, keep an eye on the CBD by Coinbase. And we have Hyperliquid, the one in green, which is also perps. Usually the main two CBDs I'm looking and exchanges are, and of course we have Binance Futures in white, which is also perps, right? The main the main venues I'm looking at is Binance Spot, Binance Futures, and Coinbase Spot. Let's make it short. Whenever you see Binance and Coinbase Spot on top, so aggressively buying, you don't want to be short. On the flip side, if you're long and you're seeing such CBDs, I would be very careful, because this doesn't seem like there's interest in buying, and there's a decent chance this low or whatever we're seeing here is not holding, and we are accelerating lower, right? So this is something to keep an eye on and something to trade around. How is this giving you an edge? Well, every market participant is leaving like a footprint in the chart, right? And one edge I found only based off low was trading CME opens between Sunday night and Monday morning. I think it's in 6 hours of time right now, because we're on Sunday. And you have like the same participants at the same time in the same order book over and over and over again with the same goal. And the goal essentially is to front run New York open flows of Monday's session, right? So sometimes you will see that the flow repeats itself and the outcome is rhyming itself, right? So you have an edge of like a higher probability trade. If you're in a position and you can align it with a few points where you say, okay, last time when I saw a flow like this, for example, my short played out really well, and I was able to TP on like the next leg down when we had more liquidations and then the current one, right? This is just an example. This is nothing to trade around right now, but you will recognize it over and over again, how you get more comfortable and more confident in your positioning and your sizing. If you have the tape open and use it as like a confirmation to your bias, maybe, right? Yeah, I think this is the main screen I'm looking at most of the week. Obviously, I'm looking at chart on TradingView, but BTC wise, I'm more interested in looking at flow, because if I'm long, I want to see more net buyers than sellers, right? And if I'm short, yeah, I don't want to see spot CBDs decoupling from perps CBDs, because falling perp CBDs, rising spot CBDs, what would this mean? This means that people are shorting or like selling the lows. Meanwhile, spot is accumulating, and probably this leads to some kind of relief, right? This was one New York session, but this is more like how it looks in action. And for example, I assume I was in a long at this point where this screenshot was taken. Yeah. This is the thing. If you're long and you see such CBDs, most likely you will see at least next highs get taken out before things change. So there's nothing to close from my experience until this picture changes. And I'm mostly riding longs whenever I see Binance and Coinbase spot bidding, because those are the main venues that really move prices. Now we covered aggr, which is not order book, but the aggregated flow, right? The aggregated tape, the live feed. How is an aggregated order book looking, and how can it be visualized to check your bias? For example, with Kiyotaka. Kiyotaka is offering a pretty good free service at the moment, where we can have insight in resting limit orders. So this is now not an aggregated tape of many exchanges, but an aggregated order book by many exchanges. So you can switch here to aggregated, and then we have like the data of more exchanges than just Binance. Kiyotaka is just really slow tonight, so could be also like not completely accurate, but seems quite fine. And then you can spot like where are people interested to buy with passive orders, right? With limits. Where are asks, where are sells? And a pretty good metrics is order book depth. For now, we came down, and it seems like asks haven't pulled up, so there are no passive sellers above. This is mostly driven by market selling, I would assume. We can bias check this live in a minute on Vela, the third platform I will be showcasing, and how you can use it to confirm your bias and to get like a feeling. I'm often repeating myself, but I'm saying the most important thing in trading is to read the room, try to understand how are people positioned, how would the market probably, or the participants probably react if we see like a move XYZ, either to the upside or to the downside. How would people be positioned if we're moving lower from here? And this picture, like to understand the room, to read the room, will make you a much better trader. And all those tools are helping me to read the room on a daily basis. So this is why, like, this is the main premise we're doing this year. Also, like, Kiyotaka probably won't look like that, but you can see here on the right what I have activated. We have VRVP, like the range volume profile from the right side. So yeah, point of control in here. Nothing I'm using too exclusive, but more importantly is like the aggregated order book heat map. And you see highlighted like the bigger amount of passive orders. So we see like 1.6k BTC limit order to buy BTC because it's below price, sitting at 87.2k, or like 86.9. We see some buyers 87k. So for example, we are seeing some downside today at CME Open. You could say that probably it will be interesting to observe low at those levels, because then we see how many limit orders are there and how much like the market sellers we're then witnessing on aggr have to absorb because to push the price even lower, right? And you get the feeling about like how quick did they just absorb like 1.7k BTC, which is size. We're talking about size. You don't see that size often in the book. So yeah, this is also helping you to shape and understand like why is the market maybe not moving lower at this second? How can I execute? Is this too low? Maybe there's a chance that until this point we saw a lot of selling, a lot of spot selling, but with this move, this spot limit order, and like maybe Coinbase waking up, Binance waking up, you could say, okay, there's a decent chance this bounces from here. Maybe I can enter along. And whenever this moves higher, I move myself break even, and you have like a risk-free trade just based off following the tape and following the flow. What else do you have here? Coinbase Premium, like this is Coinbase Spot compared to Binance Spot, more of like a higher time frame signal. Often has also like some connections to ETFs buying or selling. As you see, for now we have like a discount on Coinbase compared to Binance. This can also be explained if you look at the ETF flows by those huge outflow numbers we had last week. We have CBDs here, but they are not as accurate as aggr, so I could probably just cut them out because we have them on aggr anyways, right? But this is the part from Kiyotaka, like the visual. You can say it's visualization of order books from all exchanges. And it's more like a completion of the situation, of the outlook we're looking at from the aggr side of things. And now there is like a third venue for looking at order flow, and it's called velodata, or like velo XYZ nowadays. And there are some cool features that I will highlight. And also, like we talked about, everything here is BTC related. But you can use like some of that stuff also on altcoins, and aggr is like velo is a good help on this one. If we're looking at the chart, first of all, we made the assumption that most of this move down was market selling, and here we can confirm our bias. Because we have open interest rising. Open interest means more positions. Meanwhile, CBDs are coming to an end, coming to the lower end, and price is going lower, right? So we know for a fact, just by connecting all the dots we have collected from here, because we don't have passive limit orders that pushing the price down, it's market selling, obviously. And now the confirmation that there are more new positions than closed positions, that we have a lot of shorts, probably like have an average entry between like 89 and 88k, I would say, right? And this is something like with all this information, you can like save this in your head, those information, and now later on, okay, if we see like later in the week maybe a squeeze above 89k, those shorts could get underwater. Like this usually is just effective in like times with high volume, and to be honest, Sunday, usually not the time of volume, but we saw this price action also from yesterday night until this morning. It's quite distributive, so there's a lot of volume and a lot of new positioning open, which can be checked by open interest, right? We have an open interest rise of 5% in the last, I don't know, 36 hours. So this is definitely some positioning you have now information about that you maybe wouldn't have seen by just looking at the chart. You could have made assumptions. You could have like spent the theory around and said, oh yeah, this is probably new shorts and they would get squeezed, but you don't have any confirmation. But with looking at tape and looking at the flow and also checking like stuff like open interest, you get a pretty good picture. And this picture completes like the phrase, try to read and understand the room. Try to understand how is everyone positioned, what is like maybe the most hurtful like outcome for those guys, and how likely is this painful outcome. And if the painful outcome is somewhat likely, maybe because you see spots picking up and being completely interested in buying BTC in a downtrend, and you have some vulnerable shorts, and you have some bids like sitting below offering like a plunge protection to the downside, then it's probably a decent shot to long. And I think over long term, like this combination, like this, just trading BTC based off flow is definitely plus EV and profitable if you're like really working hard and trying to not overtrade and find those spots where you clearly have an edge over all those guys that are not following the tape, that have not spent the last few hours looking here at aggr and listening to it and getting a bit of autistic. But this is like an edge that you could use. And this is also the main reason why I wanted to showcase it in today's stream. And I hope it was clear. Thank you guys for listening. I'm really sorry how this got like delayed to the end. I hope it was understandable. If something was unclear, just let me know. Real basic question. How do we update our Argus screen to look like yours with the download from the left dashboard? Good one. You go to the three dots, you go to settings, and then you have like workspaces. So templates, and then you go to new, upload the template file, and then you pick the file that you just downloaded, right? And then it should appear as like it should build itself up like you see it here right now. There are a few features I missed, and I'm putting them out here. First of all, this template is chart. This is open interest. This is CVD, spot, and purse, but the aggr one is way more accurate. This is liquidations. This is funding rate, those two. But also very interesting for all pair traders or like basket traders, or like again, generally if you have like a watch list of a few coins and you're not sure what kind of coin you should look at. A feature that I like is creating new watch lists. Let's say tutorial, for example, and then I could put in like, I don't know, BTC. I want to add, for example, hype, and maybe I have a short leg on Polygon, right? There are some more features than just the chart one in my aggr that you can use also for like more confirmation, more like confluence and stuff. And I like the market one. And the market one is essentially like lots of data compressed in like an Excel form, right? And the good thing is you could like play around with like the stuff you want to see for your coins. And for example, want to see like, okay, maybe I want to long BTC, I want to short Polygon, like how affects this on the funding side. You can choose here between like top gainers, but also from your watchlist. The tutorial on, and you see you have like the comparison of those three coins, and you see, yeah, it's not that cheap to short Polygon at the market at the minute, but maybe it's still worth it with like only minus 30% and the market's repricing a lot lower, right? And this is also like, you see open interest changes and stuff. This is something to play around, in my opinion. This is nothing that is super useful, but like this can be like the extra percent that some market participants are missing, and at this point you're probably outperforming them, right? So I wanted to showcase this as well. Lot of cool stuff to play around in velo. You can also like play around with, I don't know, if you want to see 24-hour change or maybe like 10-minute change, right? Of the price. So that there are a lot of features you could play around.